The last time gold hit such highs was March 2022 at $2,075 an ounce. That was caused by the flight to safety by investors following Russia's invasion of Ukraine the month prior. This time round, the uncertain global economic outlook is behind the search for safe havens.
I think the number one key is the risk of recession. The risk of recession from high inflation and higher rates and slower growth this year is going to put more money into the gold market through the investment space. I think the next couple of weeks will be quite crucial. I think gold price is already testing the 1900, and if it breaks above 1900, definitely I think there's a chance to shoot above 2000.
Markets are also expecting that the US Federal Reserve will start easing monetary policy this year, and that could provide a boost to gold prices.
We expect the dollar to probably trade relatively sideways, so there's not going to be much direction from there. I think what's really going to dictate price action for gold is going to be central bank policy. And so when we get sort of signals that possibly the peak of rate hikes is behind us, and possibly when we could see even central banks starting to ease, I think that's quite supportive for gold prices. So we do expect prices to trend higher, particularly over the latter part of the year.
At the low interest rate environment, people say, well, since I get no interest from the money, let's put it in gold. And gold has been performing well in that sense. So gold actually is reversely linked to interest rate. The higher the interest rate, people may consider that maybe I should put less in gold.
Experts expect that the appetite for gold will improve in the second half of this year, which is also when the China reopening theme will hit its stride.
The other aspect of gold, which is gold jewelry consumption, which has been dampened quite a bit, particularly during the lockdown period in China, the quarter 2 and quarter 3 in China. But with China announcing or already getting into this reversal of the COVID zero policy, I think consumption will gradually come back. And not only for gold, I think general consumption will gradually rise up, and it will be generally good for the sentiment of the gold market.
But as with all investments, there are risks, such as a deeper recession than anticipated or prolonged geopolitical risks.
The Russia-Ukraine situation is still very important for commodity markets, right? Russia is an important supplier of a number of commodities, whether it's energy, metals, or agri. Likewise for Ukraine when it comes to agricultural commodities. So I think developments there are going to be very important to watch. And then obviously the Chinese demand story. And is the reopening going to go smoothly, or are there going to be hiccups along the way? So that's going to be something certainly that's going to be very important to watch. And then I guess finally is the global growth story. How deep or how mild could the recession be, upcoming recession?
No matter in which direction prices go, many investors have traditionally used gold as a portfolio diversifier.
We do advise allocate about 5 to 10% into gold as a diversification asset classes. So when investors look into gold, they have to look at what other asset classes they have as well. The more equities they have, we do advise more allocation to gold because of that negative and low correlations to equities. So basically, our advice, don't look at gold alone, but look at gold, how gold can actually help your portfolio to outperform other portfolios that don't have gold allocations.
And for investors looking to diversify within commodity markets, there is always black gold. Oil prices are expected to trend higher in the second half of 2023.
We do see that by April, May, maybe we're heading towards $75 for the monthly average, which is relatively kind of lower than most of the last year, for instance. But then we turn back maybe the third quarter, we turn back to above 80 again. And towards the end of the year, 85 towards the end of the year, maybe above, by the end of the year, we're talking about above $90 again per barrel for dated Brent.
The main reason for the rise in oil prices is China's reopening of its factories and the return of its tourists, which will spur economic growth in Asia.
We are saying that Asia-Pacific region will contribute to 2/3 of the global oil demand growth this year. Global demand growth, we forecast is about 2.2 million barrels per day. 2/3 come from China. 2/3 come from Asia-Pacific. And out of that, China contributes more than half of the Asia's demand growth this year, after the decline last year.